So, what's good, ladies and gentlemen? It's that Friday feeling, man. Genius bill is getting signed today by Mr. Donald Trump. He's also just put out that he wants the files of Jeffrey Epstein to come out. Just let me just confirm. It came on the Financial Times. He started running his mouth about, where is it? Donald Trump calls for the release of Jeffrey Epstein testimony, not files. So he's going on a different angle right now. But anyways, stock market bubble, is it about to burst or not? Now you might think, this guy, man, like, we're rising, the markets are good. But listen, do you understand what a bubble is? A bubble expands when lots of people, you're blowing a balloon, it just expands and expands. The more air, the more it expands, and then it gets to a point where it pops. I'm going to try and break down that logic for you. Are we heading into a bubble, or are we in the bubble and it's about to burst? So in other words, there's still an opportunity for you to make some money on this madness that's happening in the marketplace, because we ain't had no Fed pivot yet. That's a major thing. So in today's live stream, we're going to break it all down. I'm going to give you the time that Trump is supposedly going to be signing the bill and getting it nipped in the bud, put to bed, so that cryptocurrency can just be violated by Wall Street at a bureaucratic level. And just, God, it's brilliant. You guys wanted Wall Street? Ciao, ciao, decentralization, man. You got government playing your crypto right now. So let's get with the program, ladies and gentlemen. Let's try to keep this live short and sweet for you. And let's break down what's been going on. Here we go. So, big optimism right now in the marketplace because, of course, there's been lots of companies declaring their earnings and they've been smashing it. You've had Netflix doing really well, not so much really well. They're only a few cents above their estimates on their earnings per share. You've had TSM, Taiwan Semiconductor Manufacturing Company. You've had, of course, JP Morgan, Bank of America, Wells Fargo. All the banks have been doing really, really well. And, of course, Warren Buffett is selling most of his bank stocks because he's now going into the consumer staples, utilities, and what have you. He might be positioning himself for changes in the bigger future. But overall, the marketplace is very optimistic about things. And the crazy thing is that TSM and, of course, ASML, they both turned around and said that their growth prospects, or should we say, where they think the economy is going to be in the future, is somewhat trimmed. They think that growth is going to come a little bit laggard because of this tariff story. Now, there is word on the street that a Japanese representative is going to be coming over to the US just to start talking about tariffs and deals and what have you. But there's still no word on the European zone. And that's something that I think we're going to be going into next week. But what I'm going to do now is dive into this story about a stock market bubble and what you guys need to be aware of. Because right now, everyone's pumped up, man. You've got every reason to be in crypto right now because this genius bill is just bloody brilliant news for the marketplace. But let me just break down a little bit of a logic for you. There are stages to a stock market bubble. Stages are displacement, boom, euphoria, peak, and then collapse. Where I think we are right now in terms of the bubble is euphoria. That's where we are. Stock market at all-time highs. Bitcoin, cryptocurrency, all-time highs. Altcoins, absolutely smashing it. Money is all over the place. You've got hedge funds just absolutely jumping onto anything and everything. Big tech is just doing wonderful things right now. AI is booming. Like, well, what more do you want? Market caps are just expanding and expanding. The US deficit is going up and up and up. It's just unbelievable. Everything is just so up there right now. But let's just understand something. In order for a bubble to become a bubble, it needs to do what? It needs to burst if there's been too much pressure being put into the bubble. So what's leading this idea of a bubble? It's AI. Because every time something happens in AI, people feel like they're missing out on the next big thing. Look at your iPhones. What version are we on now? 16? Well, what happened to, back in the day, it was just iPhone. And then went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I, X, 10, whatever. It's the same thing, man. But people feel like they're missing out. That's what's going on right now, in my opinion, with regards to the bubble. We're in the euphoric state, okay? Now, let's just try and back a logic up. In front of you is the it's the FINRA margin balance ratio. So when we talk about bubbles, we need to understand what makes it. Okay, it's all good saying, oh, euphoric and or green burst and what have you. Okay, like we've got over here, the 5 stages of it. Okay, but what's the makeup of a bubble? Well, to put it quite simply is this. This green line represents individual retailer investors or investors across the board. What's their margin like? As it's going up, it means they're taking on margin, which solidifies the idea that investors are taking on risk, right? Let's just draw your attention to this area right here. This is where the margin was at its highest. That happened to be when? Well, we go all the way down to the bottom and it marries up with 2007, 2008. What happened then? Subprime mortgage crisis. Investors were so heavily margined in positions, exposure in anything and everything. This ratio balance shows that they were so margined up that it was bound to be the element of a bubble coming into play. The burst is represented when there is sharp retraces in this ratio. When there is a sharp retrace on the ratio, it means what? They're pulling that margin. They're getting rid of exposure. So hypothetically, imagine, let's look at the carry trade, okay? Japanese yen, you go and borrow some of that yen, okay? You're probably borrowing money to do that. So you then take on that risk. How much margin have you got for that? Doesn't matter. You go and borrow your yen. You then convert that into your dollars. Your dollars then go into the stock market. Stock market goes up. Then what happens? You're then speculating, you hear some bad news about something, then all of a sudden, you're getting scared. Maybe you heard that Japan are going to increase their interest rates. That means those margins that you've been borrowing off are going to end up being more costly for you, sorry. So what do? You sell your stocks, get them into dollars. Once you've got your dollars, you then go back to Japanese yen and convert it back so you're not taking the hit on the cost. That's exactly what this chart's showing you. But look, we're not in areas of extreme yet. It means that investors aren't really fully margined. So are we actually heading into a stock market bubble burst? No. According to where investors are, it's like they're not using risk. They're not really going in on full margin. Now, when you look at the chart itself, it does show you that it peaks up and it comes back down again. That's consistent with profit taking. But we haven't hit an extreme yet. So what I'm trying to say to you is that as we are in the euphoric state in the stock market, we're now waiting for the next thing, which is the peak. Now, maybe investors are starting to cotton onto the idea of that. You obviously heard about this a couple of days ago. BlackRock inflows hit after a big client withdraws $52 billion. Happens to be an Asian client. Tariffs? Sticking it into Trump? Or is it because something's brewing? When you're pulling that much liquidity from a fund, yeah, it's naturally going to hurt. I mean, BlackRock didn't really do too well on its earnings per share. But based on this document, this chart here, the bubble's not ready to burst. So that means there is still an opportunity for you to exploit what's going on. Going into this is the S&P 500 and the margin balance ratios. Let me draw your attention to something. The margin itself, if you look, the red line is the margin, and then the S&P divided by currency in circulation, that's the blue line, okay? What you tend to find is that the margin will go down before the stock market. There are instances where it happens. For example, look at this point up here if you can see it. Blue line is the stock market. Well, the red line was going down before the stock market was turning, and it had a big sharp drawdown. So what do they do when assets are appreciating? They sell them. In order to sell them, what happens? They get that money. Then what do they do with that money? Well, if it's been borrowed, what do? They pay it back. So then you're putting yourself in margin. And then when it peaks out, you take it out. And then this comes down again. Okay? So by that logic of this chart right here, we can see that where we are right now in this corner, the stock market is moving up. The margin line is moving up. So we still got more flavor to the upside by the principle of this. Wait there, we're not done. Smart money, dumb money. We've hit an extreme, but we're now turning away from that extreme. But we are in areas of extreme where the market participants or smart money technically can still sell. That means assets will appreciate even more. Now, if companies are doing really well with their earnings and what have you, then that only means that people are just thinking, okay, the valuations of the stocks, are they matching up with the fundamentals? Does it make sense? And when you've got this comment over here from Bank of America, where is it? Where is my comment from Bank of America? We went into it. Where is it? Bank of America Corp says strategists warn that a bubble may be forming in US equities, with the clearest sign being if stocks continue to rally despite rising inflation expectations and bond yields hitting new highs. How do you understand if a market is healthy or not when both high risk and low risk asset classes are performing? Now, let me just draw your attention. I just said this, yeah, about $52 billion being removed from BlackRock, right? What was that? Going into it, it says the following. BlackRock attributed the lower than expected inflows to a single large institutional client in Asia, which it had said withdrew $52 billion in lower fee index investments, primarily in fixed income products. What is a fixed income product? Bond. So they basically pulled out liquidity, equity that's been tied up in BlackRock's portfolio in the form of bonds. Why would they be doing that? Well, what did I just say a minute ago? There are two ways that you can understand if the stock market is doing well. If the bond market is going up, and the stock market is going up in sync, because it means investors are taking on low risk and they're also taking on high risk. If one is outperforming the other, but the other one is representing that investors are still not even liking the idea of taking on risk with the bonds, it tells you that the expectation of the future of bonds means that investors are demanding more to hold US debt. And if they demand more to hold US debt, what does that lead to? That leads to the yields going up. So let's just go and have a look. Where are the yields? Going right into it right now. You've got the 2-year yield. That is trading lower at 3.86%, but significantly high in these ranges. You've got the 5-year coming in at 0.9% negative, and it's still at 3.95. You've got the 10-year still trading at the 4.423. That's no good. We need this to come down, and we need this right here, bond market, to go up. If the bond market goes up in sync with the stock market, there's two agreements in terms of relationship of risk, high risk and low risk. If they're taking on high risk, that means they're looking at it for the shorter term and trying to take advantage of whatever it is they can. Welcome to the euphoric state in the stock market, which will then naturally then lead over to the idea of a peak. Now, in terms of a peak, where and what could trigger the idea of a peak coming into play? Maybe if we do see a sharp retrace in this ratio to come down, as we've seen over here, right? So when this red line sharply comes down, it means investors are pulling the margin, and the stock market naturally is going to correct at the same time. Statistically, can we justify that the stock market is overvalued? Well, you can back it up with the idea of the stock bond ratio. When this is towards the red line, it suggests that stocks are overvalued in comparison to the bonds. And you can see that anytime it hits the peak of that, that's where you're expecting the market to contract. So then let's just measure everything before we get into cryptocurrency, because this is going to help you understand if you guys are all about Wall Street getting into crypto, then what's going to make them go and buy the legacy assets? And why do you think they will go over to Bitcoin before they go over to the legacy assets? They're trying to push for the idea of Bitcoin to be put in treasury funds. Once that comes into play in companies' balance sheets, okay, then yeah, your Bitcoin's going to be moving up. But investors, they all stick with the legacy markets. And if they're not comfortable with what's going on in the legacy markets, they ain't going to be comfortable going into Bitcoin. We like the idea of Bitcoin, and we are on the understanding that we want and see Bitcoin as the future of finance. But try and convince that to a hedge fund when he's managing over $150 billion, when probably 90% of his clients he's got to plead with to try and get involved in cryptocurrency. That's why you see major companies, besides BlackRock, other companies are suggesting that they're going to try and give cryptocurrency to their clients, and it's always a small amount. BlackRock physically holds $10 million worth of Bitcoin. Can you believe that? Just 10 million. Forget the ETF, which is why Donald Trump's coming on with this. Trump eyes crypto access for 401ks in bold retirement plan shift. So this is how he's going to communicate it to the mom and dad investors who are all about the legacy market. Look at the guy. He appeals to the average investor who has got his 401ks or any investments worthy to start taking advantage of Bitcoin or even adding it to his portfolio. Right? So if he can get those guys to be convinced of it, then naturally they're going to think, hold on, well, I might as well come out of the stock market, get rid of that, start going into crypto. And if we can get them to think like that, that's where your Bitcoin will be going into significant price levels. And corporate America would be stupid to not get involved in it now. When you've got Trump trying to tap into the 401ks, okay, that's going to make people want to get involved. Yeah, corporate America's going to miss out. But we know they're not missing out because that's where your balance is. 720,000 on the Bitcoin ETF. Again, this is a money heist and it's about to clip. It's about to clip the $100 billion mark. It's a very, very, very successful ETF. Congratulations, BlackRock, on your transaction fees that you're earning with this bad boy. It's absolutely wonderful. Speaking of which, Senator Lumi's bill to buy 1 million Bitcoin will be on the floor soon once today's bills are done. What does it mean by done? It means that at 2:30 this afternoon, Eastern Standard, Mr. Donald Trump is going to be participating in a signing ceremony for the S1582 Genius Act. Not bad. So, 2:30 today, you pretty much can expect some form of volatility, even though the bill is passed. You can expect some form of volatility coming into play with regards to the Genius Act, ladies and gentlemen. Okay? Now, just to put it into perspective, you understand what I'm saying about the actual bubble? I'm not saying to you that the stock market is going to crash. I'm saying that we're not there yet in terms of margin, even though statistically stocks are overvalued in relation to the bonds. You got liquidity coming out from BlackRock, which is quite a big amount, okay? But the bubble is not there just yet. We haven't hit the extreme. We've hit the extreme on smart money, but we haven't hit the extreme in terms of margin being used. And when the margin gets utilized and completely violated, and they're just giving credit left, right, and center, and this line over here starts trading into the red area, that's when we need to start paying attention and how we then need to navigating our portfolios and putting assets in different places to avoid a nasty drawdown. If Warren Buffett is buying Domino's Pizza, which is usually an asset that usually does really well during times of recession, and he's adding to Constellation Energy, he's adding to his Occidental Petroleum, you can appreciate that something is happening right now, okay? So that's just a word of warning. That's all I'm saying to you. Speaking of which, let's quickly roll over to the Bitcoin price action, ladies and gentlemen, to give you guys some flavor. It is trading sideways. It's not really doing too much. We had a bit of success last night on the Asian session in terms of the platinum setups, but one thing that we are pretty happy with is the market watch. Now, the market watch is something that I do every single Sunday, and it's really ideal for anyone that wants to play the spot market of these assets, whether it's Euro, Gold, NASDAQ, Bitcoin, Ethereum, and Solana. Still waiting for a couple of plays to come into action, but the targets that I projected for Ethereum and for Solana have already come into play, so I usually leave it over a weekly basis. So if you had initially took a long on Ethereum on the Sunday night when I projected this, then you'd be seeing that Ethereum has effectively smashed out these targets. We had targets of 3,338 with the 3,500 coming into play. And we also ended up seeing Ethereum coming up and taking out the 3,675. So you'd brought on Sunday, which is where the projection was. You would have rode this whole move up on the market watch principle. And the same thing came into play with Solana. We wanted to see Solana make a bit of a retracement here to then come and claim the 177 mark. And of course, Solana has managed to just clear that 177 and gone to 184. So again, look, from that, we did get that little bit of a retrace and then continue straight up to the upside. So if you want to get access to that on the Traders Reality website, we've got a discount, which is all-time high. That's the code. It's pinned to the top of the chat, all-time high. And it's part of the Platinum membership. And that's where you get it, the Market Watch videos. Okay, so that's a post that you get every Sunday. And it's ideally for anyone that is a spot trader, doesn't really trade on a day-to-day basis, That's the best bit that you can get from there when you become a platinum member. And of course, what we do is we correlate the market watch to the day's weekly activity, which is where we get the 5 trade setups plus per week. It's not 5 trade setups, ladies and gentlemen. It's actually more than that. You're getting 5 a day in principle. You know, it's way more than that. It's actually 6 per day, twice a day, 3 every single day. You're just getting setups left, right, and center. All right. So the discount is 20% off your first month, and that's pinned to the top of the chat, and it's in the description as well. All right. So go check that out. Happy days. Now, quickly going into Bitcoin price action to understand where we are with everything. So Bitcoin trading sideways. Where are we on the daily time frame to understand that? Quite a bit of choppy behavior, if I'm quite frank with you guys. But it's still holding above the 5 and 13 EMA. If Bitcoin's holding above the 5 and 13 EMA, that is then consistent with trend. Okay. Although it's trading close to the 5 and 13 EMA, or primarily the 5 EMA, which is this yellow line, that's where you need to be very careful because it could sweep below it. But as long as it stays within this range, you're good. You don't want it to violate the 13 EMA. If it breaks the 13 EMA, which will put us at 115,900, chances are we're going lower. And that's fine. That's still okay. Because even if Bitcoin were to come down and test its 50 EMA, that would put us, well, it wouldn't, okay? Because if Bitcoin were to continue going sideways, the 50 EMA would then end up looking like this, right? And price action would be like that. If Bitcoin were to drop drastically, smack, hit the 50 EMA, that would then give you your test at 110,000. That 110,000 mark would then give us a big bidding opportunity to then see a reversal back up, okay? So as long as Bitcoin can sustain itself inside of this range and trade sideways on the daily time frame, the idea is that the 50 EMA will keep on moving upwards. Ideally, look to the 13 EMA because the 13 EMA on the lower time frames is, or on the 4-hour chart is the 50 EMA in principle, okay? So if you see price hitting that point right there, so if we just mark it off, that should be the 13 EMA on the daily time frame. Ish, there or thereabouts. That's where you are, okay? So pay attention to the 4-hour time frame. If you see it hit the 50 EMA, you know you're on the 13 EMA on the daily. That's where you pay attention. And then when you look left, you can see you got vector candles. So you go back down into the 4-hour time frame and you can say to yourself, where is their support? So naturally you expect 115,746 to be a level of support for Bitcoin. Will it hit it today? We don't know. Will it trade away from this and go to 150,000? Maybe. But of course, with regards to this Genius bill, however that's going to be put into action, then of course Bitcoin's price action is going to be reflective of that. I don't know if we're going to get much of a movement today until that bill is signed. Right, if I'm quite frank with you. I don't think we will see that much activity. The stock market, as you can see right now with the NASDAQ, it's not really doing too much. It's trading at the highs. That's the 4-hour time frame. If we just go into the smaller time frames on that, you can see 15-minute chart. It's just choppy, okay? It's not really doing too much, right? When it's trading sideways, there's no sweeps of Asian high, Asia low. It just shows you that they're in a consolidation, and they can do that today, and it's Friday, all right? If anything random happens and the market spurts out something because Donald Trump's decided to turn around and say that he wants to fire Powell again, then of course the market is going to react. So just be very careful with regards to that. Quickly going over into some other assets that we like to look at. Circle. People keep asking me questions about Circle. Well, Circle, $243 in the pre-market, up 3.42%. Telling you, Genius bill, done and dusted, sign. This thing's going. And it's going to make another an all-time high. I believe it's going to trade above $300 at some point, either today or going into next week. Today would be on the basis that the actual Genius bill does grab investors' attention and they just pile into Circle, okay? But we're talking a very big move to $300 if we do see that activity happening. But keep this on your radar, ladies and gentlemen, because this thing right here, it could lead to a bubble, who knows? But with the Genius bill, it's how well and effective that's going to be encouraged. If they see the success of the Bitcoin ETF, that's successful, and it's generated nearly $100 billion worth of value for BlackRock in terms of assets under management, you can appreciate what Circle is going to be like when you've actually got a use case for the stable coins, okay? So just take that into consideration when you are playing that stock, ladies and gentlemen. Quickly going over into the stock market to look at things. Nvidia is gapping up at the open, okay, but not so much. I mean, we've got NASDAQ opening up very surely. Just got some movement right now in the market, but no reason as to why. Something must be happening. Oh, it's the move. The move. That's why. It's the move. Never mind. Yeah. So the mood data's coming out on what are the top 5 buys, top sells, And the Mag 7, it looks like it's green across the board, ladies and gentlemen. So we could be having ourselves a decent start to the open itself. So the volatility index is pretty much trading lower, just show complacency in the marketplace. But we got that wick up there. So I'm not really too keen on that either. But the bonds market are trading positive, which is a good sign as well. You want to marry that to the idea of the stock market trading positive because it means that they're both taking on risk, high risk and low risk. All right. If you see the bonds market or the 10-year treasury is trading trading positive and the stock market isn't, it means investors are looking for low risk investment only, not high risk. Okay. Going over to the dollar dominance, it is pulling back down. We naturally expect it to pull back down because of that, the activities that were going off in the marketplace over the last couple of days. But for me, primarily, it's still dollar dominance. I'm expecting dollar to still mark up because your economy is doing great. And if next week's manufacturing data comes out and suggests that everything is all good for the economy, which they're saying it is. I mean, Waller last night was talking from the FOMC. He was giving us all sorts of information. The market wasn't even bothered about it. They know that the interest rates are going to stay as they are. He was looking for cuts in July. But even in September, they're betting the idea of less than 60% chance that we are going to get a cut in September. But if the data comes out strong, there's no chance we're going to get a cut in September. Your dollar's going to go up. Euro's going to go down. Yen's going to go down. Stock market, in principle, should be going up because money's going into the dollar. Investors are looking for yield and not just yield because they know the expectation of interest rates are going to be higher for longer. They're going to want to take advantage of a stronger dollar, put it into the stock market because then they won't need to use as many dollars to buy the stock because the purchasing power is going up. Capiche? Cool. Remember, today, 2:30 Eastern Standard, Donald Trump, Genius Act. Keep an eye out on Bitcoin. Might be a little bit choppy, might get a bit chaotic, but once the bill is done, I do believe that we're going to then see some activity from crypto overall. Just be careful. Don't use too much leverage and don't shake yourselves out, okay? Finally, ladies and gentlemen, mad love and respect. Remember, the discount code is valid until the end of the month, so take advantage of that. It's pinned to the top of the chat if you want to become a platinum member. And there's more information on that on the Traders Reality website. All right? Take care of yourselves, gang. Mad love and respect. Peace.